All right, so this is going to be my last talk for today and the last talk of this um, playlist on stock market investing. Previously, we've talked about what we could expect from investing in the stock market, and we've talked about obtaining our means to invest in stocks. We've talked about some pitfalls and how to identify like a gamble versus an actual investment. Um, so now we're going to actually finalize this with talking about some real investment opportunities. So first and foremost, if we want to be safe, there's a great stock called SPY. A lot of investors are familiar with it. And basically, what it is it kind of tracks the overall market. And depending on how well the economy is going to be doing, it's definitely growing at all times. When the economy doesn't do so well, it actually dips, but it always returns. So just to give you an idea, going as far back as 2006, which was quite a number of years, it's given a 213% gain. So for 5 years, it's given a 63.24% gain. So over 5 years, that's 12.6% return. So that is great. It's great. It's better than a bank account. And that if you have like a big chunk of money and you're afraid of risk, this might actually be a better bet for you than a bank account if you're planning to leave it for long term, because now when the economy isn't doing so well, you can still lose money. Like if you put $1,000 in, you might be underwater for a couple of years if we're having a rough time, like within our country, within our nation, or in the world, as like society has difficulty. We could be underwater, but ultimately it's all going to average out in the end. So in like 5 to 10 years, you'll be ahead, on average about 12%. So, so that's better than a bank account. Again, it's riskier because you have the opportunity for loss if the economy isn't doing well. But, assuming we're still around in 2, 3, 4, 5 years, it should continue on that 12% a year trend. So that's the first stock I wanted to really talk about, because if anything else, this is tracking the entire S&P 500. So it's basically tracking the 500 top corporations within publicly traded companies within the United States, or North America, whatever it is, and it's a safe bet. Like you could fuel your 401k off of this and do pretty well. You could fuel a Roth IRA off this and do pretty well. So SPY, SPY on the stock market is a very good stock to get into if you're kind of averse to risk. But other than that, there's something else we can do, and I wanted to just point this out. So I'm not telling anyone to buy any particular stock, and I'm not telling people which stocks I buy, but I am pointing some things out here. Five best performing stocks of the last 20 years. Monster Beverage, 20-year total return, 87,560%. I want to give you an idea what that The average is 4,378% a year. That's pretty insane. I'm gonna look that up, okay? So that's a case where you would have to get in early to lock in that kind of return, because that's basically measuring it from the inception when the company went public. For those people, it was definitely a gamble. But you can see if you look at the 5-year return for Monster, it's on 97.47 divided by 5. That's still a 20% return. 19.49%. So that's pretty good. That's better than SPY. And I think we can count on Monster continuing that trend, because I don't think it's going anywhere. The other factor we're going to look at, go to finance.yahoo.com here. Earnings per share, it's $1.20. All right, so that means the company is actually making money. So this is just going month by month. So every month they're making money. And this is the totals. $1.12, $1.28. And so far, you know, they're only a little ways into 2023. So this is a company that's making money. Now, last 30 years, stock market, most yearly gains. $30 best stocks of the last 30 years. Nvidia, average return 27.5%. Walt Disney 10.6%. Oracle. We're going to skip this and go all the way to the bottom. Tesla, 65.4%. That's the average return on Tesla. $0.10. I don't know what that is. Do what you will. Alphabet, 19.3%. Amazon, 31.1%. Microsoft, 19.2%. Number one, Apple, 23.5%. We're going to look at Tesla stock. 5 years, up 1,123.88. The averages for the last 5 years, Tesla has provided a gain of 224% per year. 224%. That blows our 40% out of the water. Apple, for the last 5 years, has delivered 315%. That works out to 63.17% per year. Nvidia, for the last 5 years, 616%. That's 123% a year. Nvidia does all the graphics cards for all the computers. Their only competitor is a company called AMD. They're a much, much smaller company. They might actually be a pretty good investment too, but do your research. Personally, I don't think their earnings per share is all that great. But Nvidia makes money. I'm going to say Nvidia EPS. Oops, I think I just missed it. Earnings per share, they make $1.92 a share. They're actually making money. They're not losing money. Alphabet, which is Google, 109% over 5 years. It's 21.8% a year. Much better than a bank account. Google, Apple, Nvidia, Tesla, you know these companies. They're not going anywhere. There's another one I know of. United Healthcare Group, 5 years, 95.13%. It's a 19% gain per year. 19%, that seems like that's like on the low end for a lot of these big companies. It's on the low end. Because it's on the low end, you know, you're again, we're targeting about 40% gain. You know, 20%, you know, if you have 4 stocks you're picking from, you need a table to support, because that way, you know, we don't know what the future holds. Google could go out of business. We don't know. It could. But at least we need other stocks to hold it up, but we need good stocks. Top companies in the stock market. Top 100 companies. We're going to see all the same companies. You want to go after the winners. Say 12 best performing stocks of the last 5 years. It's going to be all the same. Tesla, Nvidia, Apple, UNH, we've already discussed that. Nvidia, Tesla, Apple, UNH. It's all the same companies. These are the winners. These are the winners. So you have an option. You either pick 3 or 4 stocks to invest in to mitigate your risk. You know, what are the chances that any of these top companies are going to fold? It's really not going to happen in our lifetime it's just not. I mean, I will say 10 to 15 years ago, I refused to invest in Apple because I thought it was too late. They were already too big, and I just couldn't see them getting any bigger. I just couldn't see them continuing to grow. But when a company is a top company, it's because they figured something out. And generally speaking, they're going to maintain that position. The richest people in the world are investing in these companies, which creates a need for the stock, which when there's a need for that stock, it keeps driving the price higher and higher and higher. This is where you want to put your money. You don't want to put your money in the companies that no one else wants, the companies that are going bankrupt, the companies that aren't making money. There's a lot of companies. Look at the earnings per share. There's a lot of companies out there making no money, very minimal money, or actually losing money. Yeah, I mean, just take a look at the best performing stocks. They're the best performing. When I picked 10 random stocks, I basically picked those stocks, and what I found was the winning stocks. Like I said, there were like 2 of them. I think I mentioned it in the previous video. 2 of them that just kept doing better and better and better throughout the year, and the ones that weren't doing well just kept doing worse and worse and worse. I just kept losing money, and in the end I didn't make any money, even though I had 2 really well-performing stocks, because I had a bunch of losers. What I ended up having to do is cut the losers loose and keep the winners. The winners are going to keep winning. That's just something to keep in mind. When you buy 4 stocks and you see one going up and one going down, you got to let it sit, because time tells the truth, for the market. But, after a year, if one stock keeps going down and down and down, the sooner you can cut it loose and put that funding into the winner, the better off you're going to be. So hopefully this video helped people, or inspired. What I'd really like to see people do is get an interest in the stock market, get a get a means to invest in the stock market, whether it be Cash App, which is very simple, or Robinhood, which is a little more complicated but still pretty user-friendly, or E-Trade, which is probably one of the most advanced platforms you can use, but probably also one of the most complicated. But at least getting the means is like the first step, and then you're just able to go from there and invest in the successful companies. You have a lot to pick from. We've covered a few. I'm not telling you what to invest in, but I am highlighting a few. You've seen them in the news. Everyone talks about them. Apple, Tesla, Nvidia, Google, Amazon, which I think might be sliding down a little right now, but these are all companies that are basically the foundation of our country at this point. And you might as well become an investor and do yourself some good. And if you're afraid Apple might not be around in 5 years, if you're afraid Tesla might not be around in 10 years, or if you're afraid Google might not be around in 15 years, invest in something like SPY on the stock market. That's, again, a culmination of the entire stock market. So, the only way that's going to not do any good for you is if the United States, isn't doing so well in 15 years. But if you think our country's, on a slope up constantly, which it is, at least as of right now, SPY is a good way to go. But anyway, I hope I was able to help people. And again, thank you if you've watched all these videos. I've just been kind of home, and I just wanted to do something to help people and inspire people. And again, the market's up right now as of July 3rd, 2023. So again, I'm always getting a little more excited over the stock market when the market's actually up versus down. I really haven't said a peep about it, anywhere in my personal life or my YouTube channels, around December when the market was like really down. But yeah, just keep in mind, like if we have a 40% gain, we discussed this in one of the first videos, $1,000 will look something like 10,000 in 7 years, and then 100,000 in 7 more years, and a million in 7 more years. So after 21 years at 40%, we could have $1 million. And if we can provide some leeway, if we're adding 20 a week to that, we can add like a multiplier, like rather than 10,000 after 7 years, we could have 25,000 if we're adding 20 a week to it. And what that really does is it provides like a hedge, like just in case we're not really making 40%. We could maybe make 20% and still end up with the same results. We could still be millionaires in 21 years. And I'm getting older at this point, so my time's running out. But if you're like 18, 19, 20, 21, there's still hope for you. You just gotta start early, and spend $100,000 on college these days. Maybe you can spare 1,000 for your own benefit. Invest in yourself. So but yeah, anyway, if you have any questions or feedback, just comment on any of my videos. If you kind of enjoyed following this series, I might continue making more series like it. So just be sure to subscribe. And it's July 3rd, so have a good July 4th if you're in the United States. Otherwise, have a good July 4th anyway. But thanks for watching.